Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the economy in Russia, and specifically to talk about the surprising decision made by the Bank of Russia not to increase interest rates on the 20th of December above the current level of 21%. And the reason that was a surprise to the markets is that inflation in November increased to 8.9%, compared to the previous level of 8.5% in October. And as you can see from this chart, which shows the official rate of inflation over the past 12 months, 8.9% is the third highest rate that Russia has seen at any point in the last year. Now, interestingly, inflation fell in September from the previous level of 9.1% to 8.6%, and then it fell further to 8.5% in October. And this was seen as a good sign by the Russian authorities that everything was now coming back under control and that inflation was on its way down to the target level of 4%. And one of the key reasons why inflation fell in September and October was that on the 13th of September, the Russian central bank increased the official rate of interest from 18% to 19%, and they then increased it further to 21% on the 25th of October. And the fact that inflation has now bounced back up makes it really surprising that the Bank of Russia hasn't increased interest rates, particularly when you look at what's going on with the monthly change. This chart shows the month-on-month movement in inflation over the past 12 months in Russia. So basically what we're looking at here is the change in prices from one month to the next. And as you can see from this chart, the month-on-month movement in November was an increase of 1.4%, which was the highest level seen in Russia at any point in the past 12 months. And what's also clear from this chart is that over the past 3 months, there has been a continued increase in monthly inflation. It increased from 0.2% in August to 0.5% in September, accelerated to 0.8% in October, and has now jumped to 1.4% in November. So looking at this chart, you would say that there is a very strong case to increase interest rates to quell demand. One of the other reasons why the Bank of Russia was considering raising interest rates is that there is continued pressure from increased wages as a result of the fact that Russia has now moved to being a wartime economy. Lots of companies are now being sponsored directly by the Kremlin to produce things for the war effort in Ukraine. Those companies know that they've got guaranteed revenue and guaranteed profit, so they're offering higher wages to attract in more staff so that they can hit maximum productivity. But the problem with that is that it's driving up wages all across Russia, because the companies who are losing staff to those businesses are also having to increase their wage offers to attract in people to fill their vacancies. And this chart shows the movement in real wages in Russia over the past 12 months. And the data here only goes up to September because Russia hasn't released any figures for October or November. And what this shows is that in September, real wages increased by 8.4%. But what we have to add on to that is inflation, because real wages excludes the movement in inflation. And as inflation in September was 8.6%, actual wages increased by 17% in September. Now, as I said, we don't have the figures for October or November, but the fact that inflation has risen again in November indicates that it's likely that real wages have continued rising, therefore forcing up prices again. One of the other major contributing factors to inflation is what's happening to the value of the ruble, and we have seen the ruble falling significantly over the past 3 months, which is making all imports, including raw materials, much more expensive for Russians and Russian companies. This chart shows the movement in the exchange rate between the US dollar and the Russian ruble over the past 6 months. And what this shows is that at the start of August, one US dollar was trading for 85 Russian rubles. Today, it's trading for more than 103, which represents a fall in value of around 22% over the past 4 months. So that means that everything that Russia is importing has gone up in price by 22%. And that is a huge amount. When you compare it to the current level of inflation of 8.9%, you would actually expect inflation to be at a higher level because, as I said, it's not just consumer products that are going up in price, it's also raw materials for all Russian companies. This chart shows the movement in producer prices, which are also referred to as factory gate prices in Russia, over the past 12 months. And what this chart shows is that in the 8 months between February and October 24, producer price increases were reducing. They came down from a high of 19.5% in February to 2.7% in October. However, interestingly, in November, it's increased to 3.9%. However, when you compare that 3.9% to what's happening with inflation, which has gone up by 8.9%, there is a difference of 5 percentage points. And what that means is that companies in Russia are not able to increase their prices by as much as inflation. So it's likely that their costs are going up significantly more than 3.9% because anything that Russian companies are importing has gone up by about 22% in the last 4 months. And also, prices in Russia have gone up by 8.9%. So anything that they're buying domestically to use in their processes has gone up by almost 9%, but they're only able to pass on an increase of 3.9% in their prices. And that represents a problem for Russian companies because it means that their margins are being squeezed. Their costs are going up more than their sales price, and so their profit margins are coming down. And some of these businesses may now find themselves in a situation where they're actually making losses. So what's the summary and conclusion today? Well, I wanted to post this video because I think it's really interesting that the Bank of Russia has decided not to increase interest rates in December because everybody was expecting them to do so. When you look at the data, when you look at what's happening with inflation, which is one of the key metrics in Russia, that is the thing that the Russian central bank is trying to get control of. It wants to bring inflation down to 4%, and the current level is 8.9%, so it's more than double where Russia wants it to be. And what's surprising in November is that inflation has gone back up. After 2 months of falling inflation, it started rising again. And when we looked at the monthly data, you can see that the increase in November was the biggest over the past 12 months. So that is a very strong indicator that the Russian central bank needs to do something about this. And when you take into account what's happening with wages and the value of the Russian ruble, you would think that it's a no-brainer to increase interest rates again to bring inflation down. However, it would appear that one of the major reasons why the Bank of Russia hasn't increased interest rates in December is because of President Putin's recent press conference, during which he urged the Russian central bank to take a balanced decision for the overheating economy. So it looks like Elvira Nabiulina, the head of the central bank, took that as a strong indication that President Putin didn't want to see interest rates rising again, and so the central bank has decided not to do so. However, as we've discussed many times before on the channel, there is a very strong link between interest rates and inflation. And at times of high inflation, if you want to bring it back down, the thing to do is increase interest rates. Usually you need to keep increasing them to a point when inflation comes down consistently, and then you can start considering bringing rates back down. That's what we've seen in many economies around the world. That's what's happening in the USA at the moment. We saw another interest rate cut recently, and it looks like everything's starting to stabilize in the US. Things are not stabilized yet in Russia. We're seeing inflation continuing to rise, and there will be continued pressure because of the falling value of the ruble. Now, as I've discussed in previous videos, the ruble is now being managed by the Russian central bank. They're keeping that rate somewhere in the region of 103, 104 right now. But that will be costing them money because they're having to do that. The market has shrunk significantly for the ruble. There's nowhere near as much volume of trading as there was 2.5 years ago before the invasion of Ukraine started. But there is still some trading in rubles. So it's costing the Russian central bank every single day to keep it there. But at that level, it's significantly lower than it was at any time in Russia's history. So the cost of all imports, including raw materials, has gone up significantly. And that will be putting additional pressure on inflation. So the thing to do really would be to increase interest rates. However, the decision has been made not to do that in December for whatever reason, whether it is the influence of President Putin or for other factors. But the data that we've looked at really tells you that if you were making a balanced decision, you would have increased interest rates. So it looks like the Bank of Russia has fallen to pressure from above, and it will be really interesting to see what happens when we get the data for December and January, whether or not we see inflation continuing to rise and therefore putting more pressure on the Bank of Russia to increase interest rates, or if there's a miraculous fall. We'll have to wait and see what happens. But the overall summary of today's video is that the Bank of Russia have decided not to increase interest rates in December. They haven't given a categorical reason why they decided upon that. The data that we've looked at tells you that you probably would have increased interest rates on the balance, but it hasn't been done, and it will be fascinating to see what happens over the next few months. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.